Let me introduce myself. My name is Widia Octa Fitriani, Accounting Class 23A NPM 23412022. In this video I will discuss material about general provisions and tax procedures. What are the general provisions and procedures for taxation? General provisions and tax procedures, KUP, is a collection of regulations that generally regulate taxes. Who is obliged to pay taxes? How to calculate taxes, when and how to pay taxes, and how to resolve tax disputes if a tax dispute occurs. In short, KUP is a guideline for taxpayers and tax officers in carrying out their obligations and rights. General provisions and tax procedures refer to the regulations and procedures that govern tax collection by the government. In Indonesia, this is regulated in the tax law, which covers various types of taxes, such as income tax, PPH, value-added tax, VAT, and other taxes. Taxation in KU Law No. 16 of 2009 includes several internal meanings. General provisions and tax procedures. 1. Tax is a mandatory contribution to the state owed by individuals or entities that is coercive based on law, which does not receive direct compensation, and is used for state needs and for the prosperity of the people. 2. Taxpayer individuals or entities, including taxpayers, tax withholding agents and tax collectors, have tax rights and obligations in accordance with the provisions of tax laws and regulations. 3. BUSINESSMAN individuals or entities in any form who in their business or work activities produce goods, import goods, export goods, carry out trading businesses, utilize intangible goods from outside the customs area, conduct service businesses, or utilize services from outside the customs area. 4. Taxable employers. Taxable entrepreneurs, PKP, are entrepreneurs who deliver taxable goods and or provide taxable services, which are subject to tax based on the 1984 Value-Added Tax Law, VAT law, and its amendments. 5. Tax ID number. Taxpayer Identification Number, NPWP, is a number given to taxpayers as a means of tax administration, which is used as personal identification or taxpayer identity in carrying out their tax rights and obligations. 6. Tax period. Tax period is a period of time that is the basis for taxpayers to calculate, deposit and report tax payable within a certain period as determined in law. 7. Taxes OWED. Tax payable is tax that must be paid at any time in the tax period, in the tax year, or in part of the tax year in accordance with the provisions of tax laws and regulations. 8. Letter of notification. A tax return is a letter used by a taxpayer to report the calculation or payment of tax, tax objects, and or non-tax objects, and or assets and liabilities in accordance with the provisions of tax laws and regulations. 9. Tax assessment letter. A tax assessment letter is a letter of assessment which includes an underpayment tax assessment letter, an additional underpayment tax assessment letter, a nil tax assessment letter, or an overpayment tax assessment letter. 10. Tax bill. Tax bill is a letter to collect tax and or administrative sanctions in the form of interest and or fines. Type of tax. Income tax, PPH, according to Law No. 17 of 2000 Article 1, is a tax imposed on tax subjects for income received or earned in the tax year. Income tax. Article 21, tax imposed on income in the form of salaries, wages, honorarium, allowances, and other payments in connection with work. Income tax. Article 21 is announced by the provider of work information and is deducted from the income received by the employee. Income tax. Article 22, tax imposed on income from certain business activities, such as processing imported goods, and payments to certain taxpayers, such as companies engaged in mining and certain products. Income tax. Article 23, tax imposed on income received by taxpayers from income from rentals, interest, royalties and other service imbalances. This tax is withheld by the party making the payment to the income recipient. Taxpayer and taxable entrepreneur. NUMBER. Taxpayer Identification Number, NPWP. NPWP is an identity number given to each taxpayer, WP, by the Directorate General of Taxes, DJP. Its function is similar to a KTP, but specifically for tax matters, Taxable entrepreneur, PKP, is a term in the world of taxation that refers to entrepreneurs or business entities that carry out business activities that are subject to value-added tax (VAT). Simply put, if you are an entrepreneur and your business turnover has reached a certain limit, then you are categorized as a PKP.NPWP function as identification for taxpayers in carrying out tax rights and obligations, used for tax reporting purposes, such as SPT, notification letter, required in various financial transactions, such as opening a bank account, buying property, or carrying out business transactions, to obtain services from certain agencies that require NPWP to be included in the documents submitted, such as import documents, PIB, export documents, PEB. Procedures for registration and providing NPWP 1. Come directly to the Tax Service Office, KPP, or Tax Counseling and Consultation Service Office, KP2KP, whose working area includes the residence or domicile of the taxpayer. Point 2. Or you can go online via the Internet on the Directorate General of Taxes website at www.payac.go.id. The obligation to register also applies to married women who wish to fulfill their tax obligations separately from their husbands. Certain entrepreneurial individual taxpayers who have a place of business different from their place of residence, apart from being required to register with the KPP, whose work area includes their place of residence, are also required to register with the KPP, whose work area includes the place where business activities are carried out. Individual taxpayers who do not run a business or work independently, if up to 1 month they receive income that exceeds the year's non-taxable income (PTKP), are required to register no later than the end of the following month. Other individual taxpayers who require NPWP can apply to obtain a NPWP. Letter of Notification. A notification letter, SPT, is a tax report submitted to the Indonesian government through the Directorate General of Taxes. Provisions regarding SPT are regulated in Law No. 28 of 2007 concerning general provisions and tax procedures. There are 2 types of SPT, namely, 1. Periodic SPT is a tax return for a tax period. 2. Annual tax return is a tax return for a tax year or part of a tax year. That was from my video. I apologize if there are any wrong words. Thank you, hopefully it's useful.